Namaskaram to all the curious minds out there. I am Pawan Akhil, who is a master trainer and content developer at FinCurious. I welcome you all to another productive session where we learn about Form ITR 3 and ITR 4. So we are listening about ITR. What is an ITR? ITR is nothing but it is an income tax return. So you might be having a misconception. It is income tax refund. No, it's not. It is not an income tax refund. It is income tax return. Why it is not income tax refund? Usually people think so they might have got cut TDS. So if they file the income tax return, they might get all the amount refund to their bank account. That is a misconception people usually have. But it is not that income tax refund. It is income tax return. Let us analyze the each and single word, what exactly it means. So I'll take R. R means return. A return is a document submitted to the income tax department. Then what is tax? The amount to be payable or paid to the government for the income earned. Then what is income then? The income is nothing but the money earned during the financial year. Then again, what is financial year? Financial year is the year from 1st April to 31st of March. Okay. So this is called as a financial year. Usually financial year is the year the person will earn the income, and assessment year is the year the person assess the income earned in the financial year. So this is the basic introduction of the ITR. So let us start with the ITR forms. So if you want a clarity of ITR forms, let us see. So here you can see income tax return filings, and I am coming down. So here you can see various forms, ITR 1 and ITR 2, correct? So if you want to know the detailed analysis of ITR 1 and ITR 2, please watch the previous video by CA Rahul Saria to get a better understanding. So in this session, we are going to deal with ITR 3 and ITR 4. And then what is ITR 3 and what is ITR 4? Very simple. If any person is earning business income, what do you mean by business income? Or business or a professional? For example, any person having a business, small business or any business, and a professional. What do you mean by a word professional? A lawyer, doctor, or a chartered accountant, anybody else in that case. So these people having income, then they need to file Form ITR 3 and ITR 4 to show their incomes. So let us understand what exactly is ITR 3. So you can see here, ITR 3 to be filled or filed by the individuals and HUFs having income from profits and gains from business or profession. Even in the ITR 4 also you can see the same thing, whose total income is up to 50 lakhs and having income from business or profession computed under 44 AD or ADA. So only the difference is section numbers and it is presumptive taxation basically. The difference between ITR 3 and ITR 4 is very simple. It is presumptive taxation. So if both ITR 3 and ITR 4 is used for the business people, then what is the difference? Who exactly needs to file ITR 3? Who exactly needs to file ITR 4? So let us understand what exactly is ITR 3. So is ITR 3 can be used by individuals, HUFs, and partners in a firm. So any person having income from following sources should use ITR 3. What is this following sources? So income from proprietary business or income from partnership firms or any person holding director as a director in a company having unlisted equity shares or any person having income from other sources besides salary and more than a one house property. And if the ITR 3 is not applicable to individuals where the income only from salary is there or only from house property is there or only from capital gains is there, then this ITR 3 is not applicable. So this ITR 3 is applicable only to the above mentioned places, and for the remaining cases ITR 1, 2 and 4 might be applicable depending upon the nature and amount of the income. So now let us understand the due date of filing ITR 3. What would be the due date for filing ITR 3? Like usual normal taxpayers, it is 31st July, which means non-audit taxpayers. Whereas for the audit cases, if the books of accounts has to be audited, then it will be 31st of October. Okay. Examples, we'll take some examples of the taxpayers who would typically file ITR 3. What are the examples? Let us understand a doctor with a private clinic, a lawyer with a law firm, or a businessman running a small retail store whose turnover exceeding 2 crores, and an individual with multiple house properties, or an individual with income from capital gains other than equity and mutual funds. So these are the various examples we can see who can file ITR 3. So now let us come to the ITR 4. So ITR 4 is also called as Sugam. What do you mean by Sugam? So Hindi knowing people will understand. Sugam is nothing but easy or simple. So Income Tax Department adapted the name called Sugam to ITR 4 to make the form very simple. It is a simplicity to make the form simple. The ITR department made this. So it is because ITR 4 is primarily for taxpayers under the presumptive taxation scheme. The presumptive taxation scheme is nothing but a simplified tax regime compared to the regular income tax calculation method. Then what is this simplified tax regime? It is very simple. It comes under section 44 AD, ADA and AE. Usually any resident individual or a partnership firm or a HUF with a total income up to 50 lakhs can opt for the ITR 4. Then what about the people resident of all the categories I told, which is greater than 50 lakhs, then they have to file ITR 3. If it is up to 50 lakhs, then they can use ITR 4. So what is the difference? So the difference is very clear here. Under 44 AD, the small business people, if they need to take the overall turnover, on overall turnover, they will calculate 8%. That would be their income. So what is 44 ADA for the professionals? So any professional, as I told earlier, various doctors, lawyers, chartered accountants, any professionals whose turnover is up to 50 lakh, they can also file ITR 4 by just declaring 50% of the income. So if I am receiving 30 lakhs, my income would be 15 lakhs for the professional. So if I am a person who is doing a business, which is like around 1 crore, I cannot show 1 crore as my profit. There are going to be so many expenses for me, right? So on 1 crore, I'll just calculate 8%. That would be my profit or income for that particular year. On that income, the taxes will be applicable. So I'll give you some small examples regarding the people who needs to file ITR 4. Like a small shop owner with a turnover less than 2 crores, opting for presumptive taxation under 4480. Or a chartered accountant with gross receipts less than 50 lakhs, opting for presumptive taxation. So the only difference between ITR 3 and ITR 4 is the presumptive taxation. If any person wants to utilize the option called presumptive taxation, he will utilize form ITR 4. Otherwise, he will file form ITR 3. This is the major differences between ITR 3 and ITR 4. I hope you understood. If you still have any doubts, you can please comment below. We'll happy to help you out. Thank you all for joining the session. Dhanyawadaha.